During this video, in just under 10 minutes, I'm going to teach you exactly how you can locate order blocks in the market and how you can use them for confirmations as entries during a position when you're looking for a trade. Let's get into the charts. Alright, so order blocks are really fucking simple, yeah, honestly, like, there's not really much to it. So this video is going to be short, quick and snappy. But how we find an order block, how I find an order block at least, is this is a perfect example here. So we've got a high here. Now this high is a fractal high because it has two candles either side it that are lower than it. Now, as you can see, it's got 1, 2 here, and it's got 1, 2 here. These two candles either side are lower than this high. Therefore, this is our fractal high. Okay. Now, when you're looking for an order block, it must be drawn from a fractal high, and we're looking for it at a swing high. Now, we don't want to be entering in the middle of a fucking range. We want to be entering in at the top of range in a premium or in a discount at the bottom of a range. So, if we're looking for sales, we want to be selling right at the top of the market, and we don't want to be taking order blocks that may appear in the middle of the range unless you've done analysis and you know you're trying to catch this leg up here. But fuck that, we want to wait for the liquidity to be swept, and then we want to wait for confirmations. So an order block is a confirmation. Now we see this order block here gets tapped into later on. It takes about an hour later we get tapped into this order block here. But how is this an order block? So we've got a fractal high. Now, a bearish order block is always going to be at the top of the range. This line here is your order block, for example's sake, yeah? An order block is a retracement confirmation or retracement pan, whatever the fuck you want to call it. So for it to be respected, we want price to come up, fill the order block, and then retrace away from said order block, okay? So a bearish order block, with that being said, a bearish order block will be at the top of a range, because we want price to push it away from it. So therefore, a bullish order block will be at the bottom of a range because we want price to target it and then move off from it. So right here we've got a fractal high at the top of a range, which is also at a swing high, which is after a liquidity sweep, and then you can draw your order block from that fractal high, because a bearish order block is drawn from the last bullish candle. So if this fractal high was red, a bearish candle, then I would have to draw it from the last bullish candle, which would be, for example's sake, this candle here. So if this candle was red, I would draw from here. But it's not. This candle is green. So quite simply, order blocks are drawn fractal highs / lows. A bearish order block is drawn from the last bullish candle. Okay, this is important. A bullish order block is drawn from the last bearish candle. So it's somewhat the opposite. Okay, so literally, so order blocks are drawn from fractal highs / lows. So we've got a fractal high here. A bearish order block is drawn from the last bullish candle. So we've got, boom, bearish order block as it's at the top of a range, and we have this down candle. So imagine we're looking at the market here now, and we're looking for an entry pattern. And you can even line up your Fibonacci levels with this now, because I guarantee you they're leveling up with it. Okay, so we've got above equilibrium, 705 and a 7-9 ratio is in this order block here. So on the 5-minute chart, it's safe to say that a possible reversal could be to this zone. So if we see this order block get respected, we can then enter in a trade off of it with our stop loss above the previous highs, and then we can target the previous lows, either these lows here, or you can come back and target these lows down here. But if you're just wanting to get 1 to 2, you can easily target these lows here and be in and out of the market quickly at a 1 to 2.3 even, so you're nice. But essentially, when you're trading from an order block, you want to see price have already moved away from it, and then you want to see price come into the order block, respect it, start to move away, and then you can then you have an idea that there's a potential we're going to go lower now. So you can take your sell positions off of either a 1 minute market structure break coming off of this area. So for example, let's play out the chart now, see what happens for a second. Okay, so we come, oh shit. So we did push a little bit lower here, so I will extend my Fibonacci down to here a bit. Still got a nice 7-9 ratio, and that is a perfect tap there, right there, Jesus Christ. So at this area here, you could utilize the 1 minute time frame, and you could come down and you could say, okay, we've got 1 minute fair value gaps here. Okay, cool. If we get one of these inverse, then you can potentially enter off of the inverse fair value gap here. I would still have my stop loss above these highs just for now until we had a push lower. But yeah, we can play out the chart, see what to do. Even if you did enter in on this retracement of the fair value gap with your stop loss above these highs, you would have been safe. But personally, I would have just gone with my stop loss above the order block highs. So yeah, essentially that's how you can use an order block to trade from. You want to see confirmation of a rejection. That's why I use the 1 minute time frame after. Of course, the order block we have here is marked on the 5 minutes, so I will use the 1 minute to confirm a rejection. So after this is technically confirmed, and we don't break 1 minute structure after that either. We continue to fall down, and then we don't break the previous highs, and we do just melt after that. But that's how you can use order blocks for your entries and exits. Now I'm going to go through how you can spot them again quickly. So we've got a fractal low. How do we know it's a fractal low? Because we've got 1, 2 candles to the right, 1, 2 candles to the left. They are both above this low. So this is our fractal low now. Okay, cool. So with that being said, we know that an order block lies here. Now we are drawing our order block right now from the bottom of a range. So this would be a bullish order block because we want price to come into it and then reject off and go higher. So with that being said, we'll draw it from the bottom of a range. And what does it say up here? A bullish order block is drawn from the last bearish candle. So if we're at the bottom of a range and we're drawing a bullish order block, then we're going to be drawing it from the last bearish candle of the fractal low. Luckily again, our fractal low is bearish, so we can draw it from wick to wick with our rectangle. There, right down to there. And then you can mark this as OB as well. So this would be your order block, your 5 minute order block. Okay, so that's how you can locate a bullish order block. Now it said that price should come down. Fill the resting orders that are sitting in this order block here, causing price to reject and move off. If price breaks an order block, we then call it a breaker block. So if we see a full body closure, now what I mean by that is not a wick through and then wick up. No, we want to see candles break and close, and then we would class this as a breaker block. So I'll show you an example on the chart here now. This order block here, after this candle breaks and closes above the order block, class this as the breaker block, which is I just mark as BB. Okay, so order blocks, when they get broken and closed through, they become breaker blocks, and how they work is exact same as an order block. It's just going to be reversed now. So we want price to come back in, tap into it. Now if you see price break and then just get raped like this, fuck it off, just delete it, because there's no point. Literally leave that off. There will be other order blocks you can use, other fair value gaps you can use to get into your position, so there's no need to worry about it. You know that these things print constantly. That's why you got to have them at the right levels. But essentially that is literally how you use order blocks in the market. You find them at the fractal highs, fractal lows. They are retracement tools, so or retracement confirmations either. So you want price to come in, tap it, and then reject off of it. Once you see price rejected on the 1 minute, you have a confirmation of a potential continuation, and you can then take your position off of that. It's pretty simple stuff. All you got to know is that you draw it from the fractal highs. For bullish, you draw it from the last bearish candle, and for bearish, you draw it from the last bullish candle. Simple stuff.